Now, we believe that there are about 5 major risks and opportunities in the share market at the moment. So much going on. One day it's up, one day it's down. Danielle Ecuyer says the market will continue to be affected over the medium term, and she is here to talk to us about it. Thank you so much for your time.
Oh, good morning, Aaron. Thank you for connecting.
Absolutely, Danielle. You're from Shareplicity. Talk to us about where you see things right now, because over recent months, I think all of us, anyone who has anything to do with finance, has been asked the question, is now the time to invest? What we've seen, though, is such a topsy-turvy market. One day it's up, one day it's down. We saw Friday there was a pretty big correction in the US. Things on the way up again because retail sales look good, but who knows what's going to come out tomorrow.
Yeah, we're living in pretty crazy times at the moment. From a fundamental economic perspective, which a lot of the major investors and institutions look at, economies are absolutely devastated, and it's about as bad as it's as bad as it's been since the 1930s Depression years. Conversely, you have central banks that have stepped into this with such gusto. We've never seen such huge liquidity injections from the central banks, particularly the Federal Reserve. So you've got two opposing forces going on at the moment. You've got the economic fundamentals, which is really huge unemployment rates. The government's having to support people so that they actually have demand, they actually have income in their hands. And then you've got a share market that is absolutely going ballistic, and that is largely being driven by the central banks at the moment. So it is very hard for the person in the street, unless you're in America and you happen to be a Robin Hood trader, who are piling into a lot of the small stocks. I think for investors, you really have to go back to your basics, what you're trying to achieve, how much cash you have, how invested you have. And I think where people have really come unstuck is that everyone has underestimated how much the central banks are going to make this work.
Now, I guess in terms of disruption, usually it's technological, it can be old world versus new world as well. There can be so much happening, like with China as well. And then you throw a pandemic into it, which obviously started in China, but now we're seeing that every week the governments here are handling things differently. That's impacting share markets, that's impacting retail sales. Car sales are down 10%. We're just hearing from car sales today too. So when we see that stuff, the market tends to react. Would you say that the best thing to do when you talk about going back to basics is just to go long term in the belief that eventually everything corrects itself over time?
I think that's the only way that we can do it at the moment, because we're going to miss out on these huge share market rallies. If you look at asset classes, and without getting too technical, we have to put our money somewhere because we are not getting a return on it in the bank. There's also a few question marks if you're a property investor at the moment. So equities, from what I'm hearing from the experts, particularly coming out of the US, is that equities form the stocks and shares, the best platform to actually make a good total return over the next few years. And when I'm talking total return, I mean the capital appreciation in the share price as well as the dividend income. Now, whilst dividends in Australia, a lot of companies have had to cut their dividends. Hopefully going forward, they're going to be able to increase those payout ratios again. And I think in a lower for longer interest rate environment, really equities are going to continue to outperform over the next few years.
It's interesting you talk about property, because some cases people say there hasn't actually been much impact to property. We've had the sugar hit from the government, whether it's a JobKeeper or the job seeker, which has allowed most people to carry on as well as using their savings. But obviously the banks at some stage are going to require people to start repaying their mortgage. Saw a report today that that's already started to happen. And then the expectation is that people start handing back the keys, renters, etc. That could then impact property. So how safe is property from where you're looking at it right now?
Oh, that's a big question, because I don't really specialise in property, but I have this view that I look at it from a liquidity standpoint. I did write a piece for somebody about the differences between the two asset classes. And when you have to manage your own personal risk, you always need to look at what's the worst case scenario that can actually transpire. And the hard thing with property is that it's a more illiquid asset. And that's, I think, some property investors at the moment may be discovering that if they cannot get the rental income that they wanted on their properties, they may want to sell it and they may have to take a bit of a capital hit.
Yeah.
And I think that's probably what we could see going forward, because the yields on property, from what I can understand, have actually come down for obvious reasons. People just do not have the money to pay the rental that they were paying in the past, and therefore the renters are choosing to be quite selective on what they will go out and rent at the moment.
Now, I'm interested in your views on climate change and the risks that I guess it's being increasingly acknowledged as impacting business and many types of business as well. You think of some of the big oil companies, you think of the miners that we rely on here in Australia as well to sell to China too. What are your thoughts on this?
Well, I know it's very divisive in this country, so the best place to start is what are the large financial institutions across the globe saying on climate change? And from BlackRock, one of the largest fund managers in the world, to the former head of the Bank of England, Mark Carney, to our own the Australian Reserve Bank, they are also highlighting the risks of climate change. And only yesterday, ANZ came out and said, we have to put politics aside. Climate change is a real financial risk. And the thing about climate change is that it cuts across absolutely everything. The financial institutions are so concerned about it because it is going to affect everything from property to insurance, to potentially stranded assets as things as old coal-fired power stations become redundant and we move towards a cleaner energy future. So there are question marks everywhere, and I think as investors, we need to take it very seriously. If the big guys, if JP Morgan, Blackstone, our own banks are warning of the concerns they have about this issue, then I think as investors, we really need to embrace both the opportunities as well as the risks. And the opportunities are shares such as Macquarie, which have purchased the Green Bank in the UK a few years ago. They have a mandate within their bank to continue to pursue opportunities, if you want to say, in the green space. And there are other examples out there in the US, and obviously here in Australia, you have to question why some coal companies are cheap.
Yeah, absolutely. Danielle, really appreciate your time. Hope to talk to you again soon. Thank you.
Lovely. Thank you very much, Aaron.